Fibonacci retracement. What is it and how do you use it to make trading decisions? Well, that's what we've dedicated this video to talking about, so let's get started. First, let's start by answering the question, what is Fibonacci retracement? Fibonacci retracement is a popular technical analysis tool used by traders in the financial market to identify potential support and resistance levels. It is based on the Fibonacci sequence, a series of numbers where each number is the sum of the two preceding ones. But don't worry, you don't need to understand the Fibonacci sequence to understand how we use Fibonacci retracement in trading. However, you should know that in trading, there are key Fibonacci ratios derived from this sequence. These ratios include the 23.6%, 38.2%, 50%, 61.8%, and 100%. Although 50% is not a Fibonacci number, it is an important psychological level, and you'll get to know why as we continue this video. Now, let's talk about what the Fibonacci retracement is used for. It is typically used for identifying potential support and resistance levels, to predict market reversal, to set entry and exit points, to establish stop loss levels, to analyze market corrections, to confirm trend continuation, and it is used to complement other technical analysis tools and indicators. But hey, yes, Fibonacci retracement sounds like such a big word that's fun to know the meaning of, but you're not here for the definition or for some theory. So let's get to the chart and see how to add Fibonacci retracement on the chart. On TradingView, click on the arrow beside the Fibonacci retracement icon. Click on Fib retracement. On your chart, click once, then drag your mouse upward. Click again to lock it in. And there you have it. But now, there are so many lines, and where do we start from? Before we get to what to do with these lines, I hope you've understood how to draw the Fibonacci retracement on your chart. As we continue in this video, I'll show you how to draw Fibonacci retracement in an uptrend and how to draw it in a downtrend. However, you need to get used to and comfortable with just drawing the Fibonacci retracement anywhere on your chart freely with your mouse. So now let's continue. What do we do with all these lines? Now this brings us to the next part. How to set up the Fibonacci retracement for effective use. By now, I believe you have the Fibonacci retracement drawn on your chart. So follow these steps to set it up for effective use. First, you want to remove all levels higher than 1. Then remove the background color by unclicking the background box. Now notice how the prices makes everything look cluttered. So we are going to remove the prices by unclicking the price box. Now let's move the values to the right because it's easier to read from there. To do that, click on the drop down next to labels and select right. Now you may notice that your fib levels are not exactly on the same line with your lines. They seem to be on top, and this may confuse a beginner. So to fix that, click on the drop down and select middle. Mine is already in the middle, so there's no need for me to do that. Going forward, we also want to change the values to percentage. So click on values and select percentage from the drop down. So great, our values are now in percentage. Now if the fib percentage looks small to you, you can also change the font size. For me, I'll set my font size to 18. However, you can decrease or increase yours depending on your preference. The same goes for the lines. You may want them to be thicker so it's easier for you to see them. If that's the case, use the line level drop down to select the thickness you want. For me, I'll prefer to select the thickest line because I want the lines to be thick and as obvious as possible. Next, you want to change the colors of the line so that the colors remind you of the importance of each line. So what we will do is to change 0, 23.6%, 78.6%, and 100% to black. You can leave the 38.2% line at orange or change it to whatever color you would prefer. Then let's change the 50% and the 61.8% line to red. These two lines are very significant. That's why we are changing it to red, so it is very obvious to the eyes. Now let's quickly talk about the significance of each fib percentage level so you understand why we needed to change the colors of the fib lines. First, the 23.6% level. This level represents a shallow retracement. When price retraces to this level, it suggests that the underlying trend is very strong, and this might only be a minor pullback before the trend continues. Some people may even prefer to remove the 23.6% line from their Fibonacci retracement because it only suggests a shallow pullback. Now let's move on to the 28.2% level. A retracement to this level suggests a moderate pullback. This level is watched by traders to see if price will bounce back and continue in the original direction. The 50% retracement level is significant because it indicates a potential halfway mark where price might pause or reverse. Now the 61.8% level. This is often seen as a golden retracement level where a strong pullback may end and the original trend might resume. Many traders consider this a critical level of support or resistance. Now the 78.6% level. This deep retracement level suggests that while the retracement is significant, it may still hold within the bounds of a larger trend. If the price holds at this level, it often resumes the previous trend. So if price breaks the 78.6% level, it might signal a deeper trend reversal. I'm going to be removing the 23.6% and 78.6% levels for my Fibonacci retracement. However, you can choose to leave it in yours if it works with your trading strategy. Now, this is what we had before, and this is what we have now. It looks decluttered and arranged. This is the proper setting for your Fibonacci retracement. Now, let's look at how to trade using the Fibonacci retracement. Let's go to the chart. In an uptrend, you may notice that price makes higher highs and higher lows. These runs during the trend are known as impulse moves, and these pullbacks are known as corrective moves. You may notice that price pulled back at this point, but you do not just want to enter the market at any point. You want to be very strategic so you can profit from the pullback. So you bring out your Fibonacci tool, and to draw the Fibonacci retracement during an uptrend, you click on the latest swing low and drag to the latest swing high. Then you can move right a little so it stretches out and it's easier to read. Then you click to lock it in. Now you want to look out for when price reaches the 50 or in between the 50 and the 61.8% level or the 61.8% level. So once price reaches either of these fib percentage points, look out for a candlestick price action and a trend change confirmation before entering a long position, because you are expecting that once price reaches either of these fib percentage levels, there's going to be a trend reversal, because these fib percentage levels are expected to act as support. So once price reaches either of these levels and you see a confirmation for trend reversal, you enter a long position, meaning that you are expecting the uptrend to continue after that pullback. Now let's see how to use the Fibonacci retracement in a downtrend. In a downtrend, you may notice that the market makes lower lows and lower highs. Now let's say you notice that price pulls back at this point, and you need to be very strategic to enter the market to trade the pullback short entry. So you bring out your Fibonacci tool. To draw a Fibonacci retracement during a downtrend, click on the latest swing high and drag to the latest swing low. Now you can stretch it out a bit by moving right so it's easier to read. Then click to lock it in. Once price reaches either of these fib levels, look out for a candlestick price action and a trend change confirmation before entering a short position. So we're expecting these fib levels to act as resistance. So once price reaches any of these fib levels, you want to look out for a candlestick price action and a trend change confirmation before you enter a short position. Now we have a video on candlestick patterns, and to effectively use the Fibonacci retracement tool, you will need to have a good understanding of candlestick patterns. By combining your understanding of candlestick patterns, Fibonacci retracement, and support and resistance, you should be able to build a solid strategy. I will leave a link to our video on candlestick patterns in the description below. I really hope that you will find it helpful. I sincerely hope that you found this video helpful, and if you did, don't forget to give it a like and of course subscribe. Now we have a free Forex trading community that you can join to interact with other Forex traders. And this will be very helpful for you, especially if you're a beginner. Aside from the community, our Forex trading products also has a free economic calendar, news, and Forex trading session tab, which you also find very helpful. Just visit mytradingland.com. I'll also leave a link to that in the description below. If you found this video helpful, remember to give it a thumbs up. Happy trading. Thank you.